Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the bullish and then bearish scenario, as we are then looking for a wave Y either to the upside or in a triangle, after which we then expect continuation to the downside. Now in this scenario, there's a couple of things I like to talk about. First of all, if we are looking for a wave Y to the upside, then in this scenario, you never want to see really a WXY, which is a 3-3 and another 3 wave structure. As in a wave Y, as well as a wave W, you prefer to see simple corrective structures, meaning a zigzag in a 5-3-5, which is already invalidated, as this over here is a 3-wave structure and this retraced too deep for a wave 4, either a flat in a 3-3 and then a 5-wave move, where the most common flat is an expanding flat, where the low of B takes the origin of wave A and then an A, B, and then a wave C, or a potential triangle, where then over here we are looking for something like this, after which you then expect eventually continuation to the downside. Now a flat therefore is still possible, but the problem for a flat over here is this 3-wave structure, because if this is a wave A to the upside, then now we are looking for a wave B towards the downside, and a wave B should also be a 3-wave structure in then a flat A, B, C, where the most common target for B is in between the 1.236 and the 1.38. However, if wave B is a 3-wave structure, then this 3-wave structure over here and then a 5-3-5 zigzag structure is not reaching the targets for an expanding flat wave B, and that is a problem. So if price now moves towards the downside in a straight line, it is a higher probability it is an impulse, because in a wave B what you can see is a WXY and then a structure like this. That is very much possible in a wave B, but that means we do first need to get a retracement towards the upside and then continuation to the downside. If price just does this, then this scenario is definitely not valid. A triangle is still on the cards. Then we have a 3-wave over here, followed by another 3-wave. So a zigzag in a wave A and then a zigzag in a wave B. And at the moment, the volume over here is very much increasing. As you can see, quite a high amount of volume, not higher than this peak. So that is basically the only thing you can hold on to, because in a triangle, you like to see volume decreasing as the pattern is evolving. And 4 out of 5 waves have to be a zigzag. Now you can count a zigzag here as well as here if this doesn't go deeper, because we already reached the max target for a zigzag. Is mainly the volume that is quite questionable. So in a triangle, preferably this is the low of then an A, B, and you are then gonna have a structure in a C, D, E, and then eventually a move towards the downside. If we go to this scenario over here, which is the bearish and then bullish scenario, it looks a bit messy, but I can keep it very simple, because in this wave Y to the downside, which is the blue count in the bigger X or B, because we're looking for a W or an A, X or B, and then a Y or C. But then inside X or B, we are looking for a complex structure in a WXY. 3 waves in W, 3 waves in X, and then looking for a Y to the downside. But that Y to the downside again needs to be preferably a simple correction in a zigzag, a flat, or a triangle. Now, if wave Y is a zigzag, then this is the zigzag, it is not deep enough. So that doesn't work. So that leaves 2 options, either a flat or a triangle. Now a flat is still possible, and then a 3-3 and a 5-wave move, where you then take the highs of the triple top and then look for an impulse towards the downside to finish the blue Y inside the most common target area for a wave Y, which is between the 1 and the 1.236, and also still common but a little bit less is the 0.618. That is another reason why the zigzag is not valid, because currently we did not even reach the minimum target for a wave Y. So therefore a potential flat is then on the cards, or again a triangle, where this is then wave A, preferably already finished, as it reached the target of a wave C in this low time frame micro zigzag structure that I'll show you in a second. And then we are going to be looking for a triangle, something like this over here, and then the blue wave Y, after which you then expect a move to the upside for then this wave Y or C on a higher time frame. So this is quite important. So the only way, or the only acceptable way to move to the downside over here, is if this is going to be a flat. Meaning, if price is going to move to the downside without taking the triple top, This over here for another bounce, like I'll take the low and a move up, has a lower, much lower probability, because then we wanted to see a zigzag, which is not the case. So then if we go down in a straight line, really want to see the reaction over here because the probabilities are at that moment not very high. We see a move towards the upside. You really want to see either that flat or you want to see a triangle, but then we're not even going to reach these levels over here, as then you have an A, B, C, D, E, and then you move up. So you're not getting down here. If we then look at this scenario, which is the most bearish scenario, we are then looking for this to be a WXY scenario. So in this scenario, we then have inside of wave Y a three-wave structure in a first, second, and then a third structure to the upside in either an ABC or a WXY. Now, for the ones that know about Elliott waves, this cannot be an ABC indeed, because if this is a wave C to the upside in an A, B, and then a wave C, you want to see a five-wave structure in this move to the upside. But clearly it's not a five-waver, it is a three-wave structure to the upside. And also another thing is that if this is an ABC expanding flat, then wave B hit the rare target, the 105. Now that's not really a problem per se. The biggest problem is that this wave C did not take the high of wave A, which is extremely rare, as then we're going to talk about a running flat, which is an A, B, and then C not taking the high of A. That is very, very rare, something to definitely not really look for. But then on the other hand, if we look for a WX and then a Y, well, a WXY is not really something you like to see inside a wave Y, because we prefer simple structures and not complex structures, right? So both of these are not really great for the very bearish scenario to look for much lower prices at the moment. However, we continue to observe price, and the scenario where wave Y is simply very short, and this is the low of X and this is then Y, then Y is a zigzag, which is a completely valid structure, so that could then be the end of a wave Y, and a WXY is just extremely short in time, which is not really what you want to see as well. So it is quite difficult to look for a very bearish scenario, but of course with the other things I mentioned, with price potentially going down here, volume increasing, it might just be the scenario with the highest probability. We're going to talk about that in a second. Now if we look at the micro and we look at this being an ABC to the downside, a three-wave structure in a 5-3-5, then you can see that in a potential wave C, volume is increasing rapidly, giving us more of an indication of a wave 3, because in a wave 3 you want to see volume increasing and price moving impulsively to the downside. Usually a wave C, or at least most commonly a wave C, tends to take a little bit more time than a wave A, but this wave A is a diagonal over here, so you know that at least like a diagonal of course takes quite a lot of time to form instead of a regular impulse to the downside. So a wave C can be shorter than a diagonal, but this looks quite impulsive at the moment. However, we didn't yet break out of the target area of a wave C, but the main thing with this three-wave structure is the relationship to the other scenarios as explained, because in this scenario, this being a zigzag to the downside over here, or at least this being a zigzag to the upside, is not enough in a 5-3-5. In a flat scenario, you want this to go lower, so then you need this to actually be deeper, but that didn't happen, so we're going to be looking for something like this instead. Or for a triangle, you don't really want to see it go below this target area for a wave C and then an A, B, C, D, E, right? Now in the other scenario, if this again is a three-wave structure, then it's not deep enough to finish the blue Y. So that we then are looking for either a flat or again a triangle, where for a triangle you want to see price moving sideways from here and not go much deeper. And in the final scenario, if this is a three-wave structure, well, then what, right? Because in this scenario, this over here preferably is the end of wave Y, and you now look for an impulse to the downside for lower prices. So yeah, this being an ABC at the moment, it does not look that great because of the volume and also in relationship to the other scenarios. Now, trading psychology wise, what's still to gain down here, right? Price took the lows over here with this wick, moved towards the upside. It took this high, it didn't take this, and neither did it take that high over here. But if price would move towards the downside, what's left, right? Because I don't really have too much support. The only support I have at the moment is literally where price is right now, which is a daily naked point of control at 29,175. And in the silver update section, it's been a very busy day in the update section in silver, YouTube silver membership, I wrote this as well. This was the trading psychology bit after my update at 1 p.m. I said the thing I can't get out of my head is why would price go down again only to take the low of the range and the low made yesterday for then a move up to the highs. There's not really anything left down there after price took the double bottom like yesterday basically on the support box, which I'll show you in a second. So it doesn't make too much sense to me. Going down there again makes more sense to me to then just go down to lower prices instead of a bounce and go up once more. Either that or go up instead immediately. And then let me know your thoughts. Also in the comments, let me know your thoughts, right? What you're thinking. So what I was thinking here, this target box was blue. We bounced over here, took the liquidity of the lows, hit the support, moved up back to resistance where we had resistance now tested twice. But if price goes down again, then what is still to gain down here? Well, you could take this low, yeah, but this is already a swing failure pattern low of the lows over here. So, you know, are you going to see another swing failure pattern of the swing failure pattern? And if you take this low over here, well, also below that low, there is not too much support. So if you're gonna take this low, it has to be a quick move, close above and move to the upside in a swing failure pattern type of move. So going down here would definitely be more bearish at the moment, but currently price is at the daily naked point of control, which is as it stands now while recording, acting as a little bit of support. Now, finally, the CVD divergences before going into the probabilities. We have bearish CVD divergences all over the place. As you can see, there's no green lines. We had bearish CVDs over here. Was a nice trade opportunity that played out now. So this one over here is neutralized. We still have this one over here, lower high in price, with but a higher high on the CVD, where then the target is this low over here. And you have the bigger one between these, but that is a third time CVD, which immediately also gives a lower probability of playing out. The target, however, is the same, so that doesn't really matter compared to the first one. The reason I write third is this high already had the CVD divergence with this one, and now with this one. So yeah, and this one already played out, this one as well with this low over here, and the third one, well, you know, each time you get another divergence with the same high, it lowers the probabilities of playing out. But this one over here between this high and this high is a first time divergence, so potentially that could mean price moving to the downside because we don't have bullish divergences at the moment. Now, something to look for potentially is that if price finds support at the daily naked point of control and has a bit of a move to the upside, and then maybe a retracement with some bullish divergences, that could be interesting for a move towards the upside, as it is then countering the bearish divergence. So that's something to at least look out for. And also, if we take a Fibonacci from the high to the low, and I toggle on the 886, then you can see that the 886 over here has been very nicely respected. But the 886, first of all, is not really a target for a wave 2, but, or well, we can't really count an impulse this way, so that doesn't really matter. But most importantly, the longer price is ranging around an 886, the higher the probability of taking the highs where you pull it from. So this one over here, you can see it wasn't an 886 hit and then a move to the downside. We ranged quite long, so at least that's also something we have to at least take with us in our potential probabilities. So as it stands at the moment, of course, it doesn't look too great. Let's keep the daily naked point of control on the chart. Price is moving to the downside, volume is increasing, the scenarios explained, it doesn't look great. So if we look at the probabilities at the moment, yeah, I mean, can we take the triple top? Of course, over here I wrote triple top or triangle, because if this is wave Y over here, it is very short, and if this is a wave Y, it most likely is a WXY or running flat, but a running flat is extremely rare. So from an Elliott Wave perspective, the probabilities aren't that great. So the triple top is still something I'm looking for, but if price is going to take this low, then yeah, we have to observe the reaction, as that could be very bearish, especially with volume increasing as well. Currently price is at support, but a potential zigzag over here, if price continues, is going to be invalidated as well. If we, at least we still have a rare target down here, the 1.618, but of course it lowers the probabilities of this being a three-wave structure already looking at the volume. So currently, a move to the upside does not look that likely, but for me, this low over here is most important because of the trading psychology bit, where I said, well, what's still to gain down here, right? So yeah, keeping an eye open for potentially the triple top over here or potentially a triangle. It doesn't look too great at the moment. If we move below here, well, bearish scenarios are going to become a bit more probable, but we just have to observe what's happening. You kind of sound like, it's almost like I'm neutral, but basically what I'm saying is it's not looking great for a move to the upside. It actually looks more bearish while price is moving over here while we're talking as well, with volume increasing. So it might be the beginning of a bigger move to the downside. So instead of riding triple top or triangle, and then if this low is taken, it becomes more bearish, maybe it is already more bearish and this is the high. It's just a bit of a weird structure in a WXY to finish over here, to be honest, where you have a 3 high. So even though it doesn't look good, I'm at least keeping my mind open for still potential bullish scenarios, because in Elliott waves you always need a bullish as well as a bearish scenario. So we have to be open for everything, and we have to look for the signs more locally to decide what's up next. I already entered my short position over here, so I'm all set. It's safe, stop loss break even, and if it goes lower, I'm happy. If I see other signs more locally for a move to the upside, well, I'm happy as well, because then I'm just going to look for potential longs. But at the moment, you know, as price is falling, we have to wait and see for signs where price then can help us give confidence for a move towards the upside, or for Elliott waves to play out as well. But then again, it doesn't look too great for a high for wave Y over here. But you know, we wait and see what happens overnight, and at 7 a.m. tomorrow I make another update. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.